The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 7th, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Congratulations to those Florida State Seminoles. If you are a Florida State Seminole fan, you probably have a little bit less sleep, like myself. The game was, what a great game. What a great way to end the BCS. Next year they go into playoff mode out here, but they certainly got it right by having the two best teams finish off the season and going down to the last seconds, quite frankly, down to the last 13 seconds. It's great for my daughter. I've got one daughter that goes up to FSU at the present time, and she's in her last couple of classes, and she gets to go out with a championship. So that is a beautiful thing. In any event, let's go. And it's cold. Man, is it cold. In fact, in Tallahassee, it's like 21 degrees as we speak here right now. But I think as the football team gets back there, they'll warm things up quite a bit. So hopefully you are staying warm wherever it is that you are. But it is. And don't worry about us down here in Florida. By Friday, things will be back in the 70s and 80s. Across the state. So come on and visit us because it will be nice and warm. In any event, let's go check out one of our tools. This is the set of tools I call 7 Great Laws of Life. 7 Great Laws of Life. Folks, write these down. Number 1, the more one works, the more one plants, the more one can harvest. Something to think about. The more good one can do, the more success one can achieve. Much in life depends upon our view. Right? Much in life depends upon our view. How about this? One stone, I love this one. One stone overturned can become a stepping stone to the next discovery. Think about that, folks. How many times have you taken an obstacle and then used that as really a trampoline to get to where it is that you needed to go to? Whatever we choose to focus on, good or bad, our mind can expand it. How about number 6 here? Things will happen around you. Things will happen to you. But the things that really matter, those are the things that happen within you. And number 7 here, for 7 great laws of life, choose to do what you can, where you are, and with what you have. Well, let's go check out these markets. Let's go see what they're doing with the tools that we have. Right now, futures are up. We've got Dow futures trading up 68 points. They're trading out at 16,433. ES Mini up about 7 points. Trade out 1827 and change. NASDAQ futures up about 16. Trading out at 35.33. Russell 2000 up about 4 points. King dollar on the move. It's up a nickel. It's trading out at $80.86. Goldilocks back about $7 right now. Trading out at $12.31. Silver down 33 cents. It's trading at $19.77. Light sweet crude is flat. It's trading at $93.45. Natural gas not flat. It's up 11 pennies. Trading out at $4.42. Our call number is 877. 927-6648. If you give us a call, we'd be happy to take your call and take a look at your stock chart, help you dissect and bisect. A quick peek around the globe out here. We've got the DAX in Germany up 55 points, 0.6%. FTSE is up 0.4%. It's trading out at 67.54, up 24 points over in Asia last night. A little bit of a mixed bag. The Nikkei down about 0.6%, off 94 points. Hang Seng up about 0.1%, up 28 points, and really a flat market of the Shanghai was up a total of 1 point. So where do we begin? Well, let me warm your heart, if I can. Let's start off with our friend, the Euro Japanese yen. Let's take a look at that 120-minute chart. The 120-minute chart showing that his price was moving down. It was doing it on less relative strength. That's a little bit of a reversal. I won't call it necessarily a bullish sign, but it's a sign that the price eventually matters, and price will will start rebounding. Now, what's really taking place out here inside of the Euro-Japanese yen, and quite frankly, it's really the same thing that's taking place in our markets as we speak. What we see here is really a sideways consolidation move. In fact, each time the Euro-Japanese yen gets up into this level here that was formed by this little bearish candle, well, let's just say the top of it, I can't really call it a bearish candle because it was happening at the lows out here. Shame on me. But if we do take a look at where the resistance level is, well, it was this bearish engulfing candle right here. This big old bearish engulfing candle from about 2100 hours. What is that, 9 p.m.? That took place on January the 5th. That high was 142.64. So we can see that this black diagonal line going across my screen out here, right around the 142, maybe 50, 60 cent area, really is a resistance zone. You can see the Euro-Japanese yen really just traveling sideways here. So it is consolidating, working off an extreme oversold condition and obviously having the price relative strength divergent pattern that was out here. So with the futures being up, they're doing what they're supposed to be doing here. But I wouldn't exactly say that the bulls are out of the woods here, and we'll take a look at the all of the markets, but really we want to be paying attention to our first signal out here is what's going on inside of the currency market. What we can see going on inside the currency market, most certainly not a breakout whatsoever, just more of a sideways consolidation move out here. In fact, you would expect with the low that came in from just simply the high out here, which was at 7 o'clock in the morning on December 27th, and go all the way down to the low that took place at 2100 hours, 9 a.m. on January 5th out here. You would expect at least a dead cat bounce, at least for it to get up to 143.08, which it has not done. That's got to make you say, something to think about out there. So that's on the Euro-Japanese yen. What else do we know about this currency pair? Well, number one, it broke its rising price channel. Number two, it broke its trend line, and all that going back to the time period at about 5 in the morning on November the 8th out here. So that trend was in place from November 8th through January 2nd out there. So a pretty darn good trend. It was broken. When you break a trend, this case here, it broke the trend, never went back up and tested the channel line. That's the black line that you're looking at on my screen here. But it did manage to get, once it broke the trend, to get back up and maybe test it for a session or so out here at about 1 o'clock in the afternoon. Again, it's a 120-minute chart that we're looking at on my screen. Let's stay with the 120-minute charts here for the time being. Let's go take a look at the NASDAQ. Let's look at the NASDAQ futures 120-minute chart. What has it done? Well, first we see a couple of different patterns out here. Yesterday, as the NASDAQ was making its low, it was making a 0.786 retracement off of a swing point. It was a 0.786 Gartley buy pattern. That 0.786 retracement was coming off of the swing point from 11:30 in the morning on December the 19th. The low there was 34.78. If you go from that low up to the high that came in on New Year's Eve, that high being the 35.95-ish range. If you go from the low to the high, the 0.786 retracement is where price stop yesterday. Was also 1 to 1.2728 to be equals CD on the way down. Of course, that was a signal that was given to us when we saw the only retracement that the NASDAQ futures were able to do were a 0.382 retracement, and that was coming in at 9:30 in the morning on January 3rd. So it's completed its pattern. In this case here, the NASDAQ futures, we want to really be paying attention to it, and we want to really be paying attention to 11:30 in the morning yesterday. That high is 35.3725 because the bears is very clear where the bears defend their position. And at this stage here, we're going to see if those bears are just still hanging around. You got a nice little rally here this morning with futures being up, and the NASDAQ, which has been the leader on the way down. We want to see how the NASDAQ futures, as they've traded up into this little breakdown area, and that is, again, it started at 11:30 in the morning yesterday. That high was 35.3725 out there. So that is the place that we want. Now, what happens if, in fact, the futures move above that? Let's clean this chart up just a tad. Let's get rid of the formation tool. Let's get rid of the A to B equals CD down pattern. Let's get rid of the retracement here, the 0.786. We covered that. There we go. We get a little bit of a cleaner chart out here. And now if we go from the swing point high, the New Year's Eve high, all the way down to the low that was put in here yesterday morning at 11:30, what we'll see is a dead cat bounce just slightly above 35.39 area. If it can clear 35.39, then you're looking at about a move to about the 35.60 range out there. That would be nothing more than your 0.618 retracement. And that is on the NASDAQ futures, and we want to be paying attention to what the weak hands are saying to see if we've got any bulls that are back there to in order to be able to push price higher. If we take a look at the Dow futures yesterday, boy, big old bearish engulfing candle. This is why I say, hey, don't get too overly exaggerated out here. Make sure that you're paying attention to the chart patterns, certainly the candlestick patterns, because one could say, hey, look, the Dow futures are up 70 points. You always got to kind of keep things in perspective out here, and part of that perspective is this big, if you want to know where the bears are hanging out, well, that's pretty simple. That is at the 11:30 session as well. Now, it's a 120-minute chart, so it began at 9:30, right? So it ended at 11:30. So you're really talking about 9:30 to 11:30. And so was that yesterday's open. That high out here, 16,472. We're only trading at 16,435 right now. So expect that to be a real resistance line. And the question is going to be, as we take a look at the Dow futures, the 120-minute chart, it formed a great Gartley sell pattern yesterday. I mean, totally confirmed in a big way. So we'll see if the bears are still hanging out here. Again, that's at 16,472. And if they are, the question becomes, does this just simply become a little bit of a sideways pattern out here, a little consolidation, a little bit of give and take, a little bit of a tug of war between the bulls and the bears? 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give conditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting T.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely is, folks. Welcome back. Gold under attack here this morning. Under attack, it's down $9, so somewhat unchanged out here. $9 down $9. So trade down at $12.28. Yesterday we had that during the show. We had that big 1 minute spike here. This is the 5-minute chart that we're looking at on my screen. If you're following us on TigerTV, fat fingers or not, it was a trade. Looks to be so far valid. You had 13,000 contracts during that 5-minute time period here, and price had pushed down to the level of 12.32 out here. It is a high volume spike down. Looks like 12.24 is going to be the first area here to be tested inside of Goldilocks. That would be about your 0.618 or retracement level from that low to the high that was put in back here. I'm just going to use the high at about 1:30 this morning. 12.24, if that level doesn't hold, in 12.19, and that says really you've got a high volume low, says that 12.12 could easily be tested again. That is on Goldilocks on a intraday time period out here. If we take a look at silver right now poking its head back into the descending price channel. That is not good news. We got a lot of time left in the trading session out here. So far we have seen, and this today is going to be the third test. So will the third time be the charm out here? And what do I mean by the third test? Well, if you take a look at this descending price channel here, and that is the red diagonal lines that you're looking at my screen, and where we want to focus on is we want to focus on the top line out here, and that top line descending price channel, beginning with the December 3rd session out here, the open of that session, which was at $33.49 out here. You can go ahead and use as the next open session, February 7th, 2013. That open $31.85, and you can come use the open of the session down here August 28th, right around $24.50. All of those create a number of very good touch points out here, and what we can see is that silver broke through that area. Did it on January 3rd, came back and tested it yesterday. Looks like we're testing it again today. Bullish says that it rejects and it stays above that descending price channel. Bearish says that it ducks its head back in there. If it ducks its head back into and closes back inside that descending price channel, well, then it says, you know what? You can go back and test the December 31st lows right around 1872. And, of course, if it breaks that area, then it's going to go check out that Morningstar bullish engulfing reversal candle formation that took place on June 28th out at about $18.18. That is what's going on inside of silver. If we go take a look at light sweet crude, let's take a look at crude oil here. Crude having, looks like maybe completed not completed anything. All that light sweet crude has done is come back to its true primary trading range boundary number. The largest number of co-located opens and closes inside of light sweet crude is at about $93.07, give or take a few pennies. The actual low that we saw yesterday, $93.20. You're trading at $93.47 as we speak right now, so it's truly up against an area of potential support. We see it dip below that price point. Excuse me, I got a piece of... sorry about that. Little piece of dust. Must be... sorry about that. Woo. We'll try to get this back on track here. Nothing like losing your voice there while you're on the radio. Excuse me. All right, let's try to get this back here. So, if we see a break below 93.07, what that's likely going to set off is a move down to about $88.14. Your 1-to-1. A to B equals CD. So I got to weather this storm here for about a minute. Sorry, I don't mean to be disrespectful and try to clear my throat here while we're on the air, but boy, sometimes you got to do what you got to do. In any event, so you got an A to B equals CD down. That looks to be forming inside light sweet crude 9307. 9307 is the area that's really under attack that we want to be paying close attention to. Let's take a look at natural gas here, and not the natural kind of gas, but the natural kind of gas here that has been on a tear, trading out at $4.40 as we speak here right now. It's got some resistance, perhaps right here at this little downdraft from December 31st, the high there of $4.44 out there. That's what's going on inside those commodity markets. Hey, let's take a quick peek here in the world. Let's see what's going on in the world of the FTSE. This is what I want to be paying attention to because the FTSE here, much like the New York Stock Exchange, FTSE, quite frankly, for a longer period of time has been trying to break above its 2007 highs, and it has not been able to do that. This is a good time for me to go get some water. I'll be right back, folks. We'll check out how these markets are going to open.
Look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for his subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. We got the Dow up 70 points, trade out at 16,495. S&P up 7, trade at 1833. Composite up 15 points, trade out at 41.29. Russell 2000 leading the charge. The upside, it's up 5 points right now. Apple down $1.45, trade out at 542. Microsoft up 12 ticks. Google up $7. Leading the charge to the upside is Epizyme. I think EPZM. That's the ticker symbol. That's up $11 right now. It's up 58%. Must be somebody must have cured something out here. What I don't see. I don't see what they cured, but boy, they are up nice. You got Valent Pharmaceuticals, VRX. That's up 8% this morning as well. Google up $6. Neurocrene Bioscience up $6. That's up 60%. Man, something big going on here. Splunk, not splunking this morning. Splunk is up about 7%. Celgene up a couple of percent. 3D Systems up a couple percent. Workday Inc., that's up about 3%, up $2 and change. Monster Beverage, that's up about $2 here. Boy, talk about, if you're watching this on TigerTV, I'm going to bring up the VIX index here. Now, the VIX index, I sent out to my newsletter subscribers yesterday because we've been, watching the market. We're neutral. I'm neutral when it comes to, got plenty of positions, but when it comes to the indexes here right now, I'm in a neutral position. And part of that neutral position is because I've got both bullish and bearish signals inside of the indexes, even on a daily chart out there. I've got, competing patterns. So when I have that, that's a time to say, okay, time to be a little bit neutral. And part of that neutralization came from the activity inside the VIX index, which over the last 7 days has been very, very wacky out here. Well, part of that wackiness was we saw the VIX index moving up into New Year's Eve, moving up. When I say moving up, taking on the 50-day exponential moving average out here. New Year's Eve, it actually, for a time period, while the market had been trading, and it closed at its session highs out there, right? It had gotten above the 50-day exponential moving average, and it was moving, the last couple of days of the trading year, you had the VIX moving up, and you also had the markets moving up, and that's kind of a unusual dynamic out here. And then, of course, on January 2nd, January 3rd, January 2nd, you had the VIX actually close above the 50-day exponential moving average. So that's what began that. Now, when we saw that pullback on January 2nd, that made a whole lot of sense. Now, what the VIX has actually done here, as it was making its most recent lows, which took place on December 26th, made a little hammer candle out there. Nice big hammer candle. And in fact, even in yesterday's newsletter update that I sent out to my clients about the mere fact that I said, hey, looks like these markets here are going to bounce. That's what we've really seen take place here thus far. So there's a couple different patterns out there. That helped anybody who was an intraday trader to understand what was likely going to unfold. It helped anybody that I just simply want to understand what was going on with the markets. You had a number of folks saying, hey, shouldn't we just jump on the short position here right now? And Joe just really took a look at the stock charts and said, well, here's what the charts are really telling us is going on inside the market. So this bounce here that we are seeing, That was to be expected. It was certainly be expected as I took a look at chart patterns at 2 o'clock yesterday afternoon, and then went ahead and updated subscribers out there. And even I got a couple emails last night during the game saying, hey, shouldn't we jump to the short side? And I said, well, actually, I'm long the ES Mini. One position was at 18.21, and then I was able to just simply put that at break even as the game was coming to as the third quarter was coming to an end at Florida State and Auburn game, and then it added to the position at 18.24. We're trading at 18.29 right now. Now, inside the VIX, what I also said was that I'd like to maybe take a look at volatility trade, which I don't often do, but take a look at a volatility trade as the VIX moved down into the hammer candle, because it's a beauty. Because you had both a hammer candle and a bullish engulfing. Two very nice bullish signs, one being December 26th, the other being December 27th. My expectation was that we'd see it kind of pull back gradually, not do what it just did here, which was get down to the 0.786 retracement level. That's inside the hammer, 1231. And now you're already trading all the way back up to 1322. So we'll keep an eye. Now, what this tells me, though, about the VIX is that there's a lot of liquidity in the marketplace. So take a look at the VIX index in a couple of different ways. Number one, pay attention to that 50-day exponential moving average. Carnage can be done to the market when the VIX gets above that level. When the VIX is below the 50-day, you have one of two patterns that unfold. Either move higher in the markets or a consolidation. Either one. In this case here, boy, the VIX came down, tested that hammer candle, and man, I think there was some, maybe it was all the newsletter subscribers that said, hey, I'm going to go ahead and put on that trade if it comes down into the 0.618 or 0.786 level. Now, the reason why I was suggesting the 0.786 level of the VIX was because it would come down and it would at least test the top of that hammer candle, that top of that hammer candle from December 26th. Being $12.50. You're at $13.21 right now. So in any event, we'll continue to watch it. When the VIX is, yesterday you had the markets moving down, the VIX also was moving lower. And so part of that message to me was, hey, there's a lot of liquidity still left in the marketplace out here, which makes a lot of sense because we're at year end, so you've got money that is flowing into the markets. It's got to go somewhere. These folks have got to stay 100% vested. So that's really what it is that we're seeing unfold. Remember, we got to keep things in perspective out here because we know that the Bulls and the Bears have got these defensive lines, or the Bears have got these defensive lines. Here's the ES Mini. Talk about consolidation moves out here, bearish reversal signs. You take a look at 12 noon on January 3rd, up about the 1833-ish level out here. We're at 1829.25. So hint, 1833-ish is a good place to really tighten your stop if you happen to be long the ES Mini out there. In fact, start to look for perhaps a move lower. Perhaps move lower. Use stops. Let the markets go ahead and take you out, or just simply take your profits off the table. But right now, what we're seeing here is really nothing more than a sideways consolidation move, at least inside the ES Mini. That's on the 120-minute chart that we're looking at. If we go back over, again, we take a look at the Dow. You can see here the Dow futures not back up to the level where they really dropped off yesterday morning. So just kind of normal moves out here in the marketplace. Chop, chop, fizz, fizz. Oh, what a relief it is. Choppiness here, the euro, Japanese yen, not taking out any kind of resistance level out there. And if we take a look at the NASDAQ futures, the NQ out here, NASDAQ futures, if we take a look at the bounce thus far, so we saw that it came down, made a 0.786 retracement, and here's the key. If you take a look at so far the bounce, what we're looking at, the 0.382 retracement is what it's gotten up to. 35.39 is the number, and it's gotten up to 35.39. You got to love that. 35.39.65 is the number it got up to. So far it's been up to 35.39.75 inside of the market. So nothing huge out here, just normal. Now, I would say that the NASDAQ futures, I'd like to see it get up to that 35.60 level. I'd like to be able to see it get to that normal 0.618 retracement area. And at that stage, if we were to see that unfold here today, which I wouldn't be against, along the ES Mini, and NASDAQ will go ahead and raise the boats out here. Most folks will think we're out of the woods, but you'll know differently because what's likely unfolding is nothing more than the B to the C of an A to B equals CD down. And that would look in the NASDAQ futures, and that's where you'd like to be in the NASDAQ futures to the the Qs, I should say, really to the short side. That would then set up your A to B equals CD down pattern. That would take you to about 34.72. Now, what do we have hanging out at around 34.72? Well, if we go from our swing point low, Ben Bernanke day out here, and again, it's a 120-minute chart we're looking at. That was a 2:30 p.m. time frame. That was on December 18th. If we go from that low to the high out here on New Year's Eve, you're going to see right at about the 34.72. Well, it's really a 34.83. You have your 0.618 retracement. So that sets up your next potential Gartley buy pattern inside of the NASDAQ futures. Let's take a look at what the potential expansion would be of that move here. 1.27, Oh, that's beautiful. So that pattern, I don't think I can draw it in here. Let's see if I can. I don't think I can because I can't. I can't grab all of the. So I can't draw that pattern in here ahead of time. At least with this tool, we can draw it in with our A to B equals CD. So what I'm doing right now is I'm ahead of time setting up the trade, what I consider to be the most likely trade that we would see unfold here, and that would be this. We'd take a look at the NASDAQ futures, maybe making their way up to about 35.60. That's your 0.68 retracement. And then from there, giving us some kind of a bearish reversal signal, moving on down to go ahead and form the C to D leg of the A to B equals CD down. It would take us down into a price range of about 34.72 or so. Maybe it takes place about a week from now when the next full moon comes in out here in the marketplace, and then we see another bounce, another chop out here, and so that's really the patterns that we would set up. And why do we do that? Well, it's really similar to what we did yesterday, right? Yesterday we showed at 9:30 as we were coming on the air on the 30-minute chart. Maybe it was a 120-minute chart. Let's see here. Let's go back and take a look at the it was a 120-minute chart. We were taking a look at the Gartley sell pattern. We were taking a look at those Fibonacci numbers, 1.272, C to D expansion, and the 0.618. A to D retracement out there. So we were just setting that up at a time. We also did it on the Euro. We were taking a look at a 30-minute chart on the Euro yesterday. It looked like this, and that was suggesting that it looks to me like the Euro will move up into about the 38-ish type level, maybe a bit higher where it makes that 1-to-1 A to B equals CD. It did make it a bit high, ran right into the bears here as it was. Now, it was moving up into that level and was doing it with a wide-ranging bar. That was right here at 11 o'clock yesterday. So as we were going off of the air for the second show out there, when you come into an area with a wide-ranging bar, that's not exactly where you want to go ahead and take a position to the opposite side out there. You want to let things cool off. You want to wait for some type of bears to rush in. And that actually is what took place out here at 12 noon. So it's a 30-minute chart that we're looking at. By 12 noon, what you got was the bearish reversal signal, the bearish engulfing candle. Now, what does that do? That sets up resistance at the high of either the session or sessions that it engulfed, and the highest high. Well, that took place at the session at 11:30. That high was out at 136.50 out here. That set up the resistance area. How strong of resistance is that? Well, let's just put a black line across our screen here. We can see exactly how high of a resistance level that is. Take a look at that. That's a beautiful thing. That's why you want to go ahead and make sure you understand and you want to use your Japanese candlestick patterns out there, and you want to know which ones to actually trade and how to trade them and what patterns are here. You can see that the black horizontal line going across my screen, is that acted as resistance? Is that an important resistance area if you were trading the euro US dollar? Well, the answer is yes, because take a look. What happened here at 1:30 yesterday afternoon, got up, tested that resistance, rejected it. Did it again during the 2 o'clock session, and it did it again as we were coming on, this morning at 7:30. You had price get up into that level, held as resistance again one more time here at 8:30 this morning. So we can see you've got some significant resistance right inside that level. Again, that level being 1.3650. That is on a 30-minute chart for the euro US dollar. So all we've done here when we took a look at the NASDAQ futures was set up a potential pattern out here, and we'll just have to see if it unfolds. But then ahead of time, you've already mapped things out. That's the beauty of using advanced leading indicator patterns, because ahead of time, what happens is you said, here's what my expectation is, here's the pattern that could set up, and if it does, then you should know what it is that you're additionally looking for in order to be able to go ahead and take action. I always say bullish or bearish, depending on what side of the trade you're looking for, you need to see some type of signal out there. Don't be trying to buy the bottom tick, and don't be trying to sell the top tick. Wait for some type of confirmation. And if at least at a minimum go down to an intraday chart out there, maybe like a 15-minute chart if you're trading on a 30-minute chart. In any event, enough of the lecture tour. Let's go check out some of these equities here that are moving and grooving in the marketplace. Let's look at a couple of them that are trading to the upside here this morning. Number one leader in the clubhouse here is EP, ticker symbol EPZM, and that is Epizyme Inc. Gapping up this morning, but coming into a little supply line here, this little downdraft. Let's take a look at this. Looks like a IPO. So this is an IPO. Came out, debuted on May 31st, 2013, the low of which was 1860. Actually got down below that level with volume. We'll go take a look at that here momentarily. But the low on that IPO day, 1860 high, 2363, makes a move all the way up to the high on July 18th. So it makes a high out at the 4380 level. Forms an A to B equals CD, completed the 1 to 1.272 on the way down, but did it with a wide-ranging bar. That had volume there of 4.1 million shares, so it's trading up into that level here as we speak right now. Volume today, so it was 4.1 million shares to the downside. Today, though, it has done 1 million shares in the first 18 minutes of trading. So from a supply line standpoint, it's really trying to take that out with volume out here. EPZM. Let's see, what in the heck do they do? See if I can find something here on my... so they are clinical stage biopharma company engaged in discovery, development, planning, and commercialization, well, just of various personalized therapeutics for cancer. Okay, so that's what they are trying to do, is cure cancer out there. That is ticker symbol EPZM. Google is on the move out here this morning. It's trading up $11. We'll go take a look at Google, a couple other core stocks when we get back from this break here. Right now, we've got the Dow up 96, S&P up 8.5, Russell 2000 up 7 points. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's trading out at 16,526. It's up 101 points. S&P is up 9 points right now. On the move here this morning, we've got Google to the upside. If we take a look at Google here right now, it's trading out at 1128.50. Now, there's nothing bearish that I can see on the stock chart out here at all as we speak. Today, if I was going to find any one thing out here, is that in the trading session is not over. So you got Google here gapping up slightly this morning. Let me see. Yesterday's high was 1118.86. Low so far 1121. So another gap here inside of Google. Google. I'll get that out, won't I? Google's had several gaps here recently. Of course, the largest one being the one that took place here on October 18th when it gapped up with some big, huge volume out there. That's wide price spread. That is accelerated volume. That's textbook wide price spread and accelerated volume. And that is not a gap to be afraid of. That is a gap to as we've seen here, that is a gap that just showed its next momentum move out there. Of course, we had Google, which had been traveling in a sideways consolidation zone, and more than broke that on that one day. It made that measured move and then some. Now we've seen a couple of other small gaps out here. One that took place on the trading session here of December 21st moved up with 1.7 million shares, and that gap, in essence, was tested. Let's see, price pulled back with 1.6 million shares, going against 1.7 million shares. So not enough volume to, in fact, really you could almost use the benchmark of 3.2 million shares from December 20th. So that's been tested here once. You got another gap. If we take a look at this chart on a longer-term time frame, on the monthly time frame, let me go back to the daily chart. I was going to say, the only bearish thing that I can see out here is the mere fact we're making a higher high on less relative strength as we speak here right now. But today's, it's just gapping up. So the session's not over. So that's really not, that's the only, and I would really have to stretch. I would really have to stretch to say that was a bearish signal as we speak here right now. Now, if we take a look at the monthly chart and we go back into the August of 2004 time frame when Google was out at 95.96 out here. It's on its way. It's up above the 1 to 1.272A to B equals CD on the monthly chart. You can't find any bearish or reversal signal out here. In fact, the only way you could see a bearish reversal signal in the month of January, not that it can't happen, what you would need to see would be a close below 1063.51. That would be the number that you would want to be looking for in Google in order to say that it was time to start retracing back, maybe back to that original gap. Otherwise, what Google wants to do is move up to about the $1,300 range, the 1 to 1.618. A to B equals CD to the upside. That's what's going on inside of Google. Let's go check out Apple. Apple, for our friend Brian in Mississippi, he's in some calls or may still be in some calls, and Apple did hold the 50 50-day exponential moving average. It is being tested again here as we speak this morning. You've got Apple trading out at 540, 43, 539, 69 is your 50-day exponential moving average, with money managers putting money back to work, coming in from retirement funds, pension funds, you name it, with it being the end of the beginning of the year, I should say. We'll see if there are, if Apple gets below the 50-day exponential moving average, they're probably not going to be too enthused to stick money back to work inside of Apple. Of course, the black line going across my chart here, I believe that's the 200-day exponential moving average. So that is the golden cross that actually took place inside of Apple, and that was back on October the 4th out there. And that was after Apple was on its way to complete the 1-to-1 A to B equals CD. Folks, it is Terrific Tuesday. Stay warm because it's cold in most parts of the country. Thanks so much for joining us. Stay tuned. The Money Masters Show will be up next if you're off to start your day. Have a terrific Tuesday, and I'll look forward to seeing you first thing tomorrow morning. Take care, folks.
We'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.